I may be a slow walker, but I never walk back. Abraham Lincoln. My friends, the lesson from that one is don't worry about how fast you get this. You just keep plunging ahead, moving forward, never going back. How do you go back? You stop practicing on a daily basis. You stop spending the 10 to 15 minutes. If you will do that, you will inexorably move ahead. Let's jump into these charts. We see stocks and bonds up for the day, gold down, Bitcoin up, if you can call it that, 0.03%, 0.3%. We'll get to Bitcoin in a minute. Let's look at the S&P first, up 0.17. Let me say that again, 0.17. So what do we see going on here? We see that we have a red spinning top forming for the week. Price percent oscillators pulling away from the red signal line. A big drop off after 3 prior weeks of strong up movement. Now, we saw what happened the last time we had a spinning top, and when we had 2 in a row, things just sort of, digested the gains and then popped up again. So we'll watch, wait, and see just how this moves. That's the reason we've never had the crossover, because we've had this devolution the whole time. This up, sideways, down, up, sideways, down. Well, guess what it does to a lagging indicator like the percentage version of the moving average convergence divergence indicator, which is the price percent oscillator. What does it do to that oscillator? Well, it doesn't let it oscillate very well, makes it highly inaccurate. What does that mean? That means that when the S&P or any stock or ETFs is performing that way, with that much sliding movement up, sideways, and down, you want to stay away from it. Why? Because you don't have accurate charts when the stock price movement is moving that way. Does it mean that our indicators don't work? No, it means that the price movement that you have is not conducive to the indicators telling you what's going to happen. That makes sense? And my friends, there are thousands of stocks and ETFs. You have to get bent out of shape because one's not working. There's plenty of other good ones. And don't forget, my friends, for those of you who are Patreon supporters, 20 weekly vertical crossovers. We'll be compiling those as soon as the show is done. Okay, let's keep moving along. Red spinning top, losing momentum. Let's go to the 2-day chart. What do we see there? Red down candle forming, price percent oscillator pulling away from the red signal line, derivative oscillator gone negative. First day of the latest 2-day candle, plunging down. How about the half day? See where it was way down in the morning, recovered some in the afternoon, price percent oscillator, derivative oscillator heading down. So that is where we are for those of you who jumped into that 2-day recross going down. Well, it's going all right for you now. Pay attention to it. Be careful. Watch it, particularly that 2-day along with the weekly. And of course, you can have a little bit of foreknowledge potentially from the half-day chart, but it's really the 2-day and the weekly. These are the nuances you learn if you follow with us every day and you practice trade and you fill out your trade worksheet. Now again, I emphasize those worksheets, and about once a week, I make sure to put at the end of the video, I'll do it today, the 3 trainings we have on the daily market worksheet, weekly market worksheet, and trade worksheet. Attached with those videos are PDFs, as there are every day in your show notes. And again, if you're not a subscriber, go sign up for free at chartingwealth.com. Those PDFs of the daily market, weekly market, and trade worksheets are always available to you. The instructions will be in today's, at the end of today's video. Links there. So what do you see on the Nasdaq 100? It was up 0.48%. But again, as we look at the weekly chart, we have a red spinning top. Again, we haven't had a crossover going down yet, so we're still in a confirmed up move, but it is very weak, very close to crossing over. If we have a big down Friday, you could see things cross over. So pay attention, be aware. That is indeed possible. Derivative oscillator is positive, but losing momentum. What do we see on the 2-day? We see again a down candle that is forming there. That 2-day again is showing us. Now, sometimes I'm thinking everybody's joining me with the same amount of knowledge. I said the market was up, but you see what? A red down candle forming. Why is that? These are Heikin Ashi candlesticks. Heikin Ashi candlesticks are extremely important to understand. And you know what I'm going to do? I'm going to leave out, because I only put 4 things at the end screen. I'm going to leave out how to fill out the weekly market worksheet. I'm going to put the Heikin Ashi training there so you guys can understand. This is showing us the average pace of price movement, the weakening that you're seeing there. Derivative oscillator gaining downward momentum, price percent oscillator heading down. Let's look at the half day. See, down in the morning, recovering some in the afternoon. Price is still below that half-day trend line. That is where we are on stocks. We see some weakness in there, both on the Qs and on the S&P, and we'll see how the week ends up. Maybe a weekly vertical crossover going down on the Qs. I doubt it, but it's possible. Well, why would I doubt it? I don't know what it's going to do. Again, don't know what it's going to do. So we'll watch, wait, and see. Now, let's look at 20-year bonds. Well, we have a green up candle after things really peaked on bonds recently, back on the week ending the 23rd of July, sideways and then down over a 3-week period and then popping up this week. Price percent oscillator remained positive. It was flat for a while. It's moving away from the red signal line. Derivative oscillator still positive, still losing momentum. 2-day chart, derivative oscillators negative, price percent oscillators negative, heading up. 3, this actually represents 5 days because this is just the first day of the latest 2-day candle. But we do see nice up movement. Haven't had the crossover yet. Now, what happens if there's a crossover at the close of the market on Friday? That's a 2-day recross going up that could get you back into bonds. And as we've said several times, that last 2-day crossover going up, recross, was a beautiful one to behold. It rewarded those who traded that very, very, very well. And we'll just continue to watch as the price percent oscillator on that half day moves up. Derivative oscillator positive, losing a little bit of momentum up in the morning, about the same in the afternoon. That's where we are on bonds. On our big 4, we'll lastly go to gold, which was down a little bit for the day, down point. It's always so hard to see it in the light I'm in. 0.2, going to have to change screens here. 0.29, gold down 0.29 for the day. We look at this week in gold. We have a little bitty green open box candle. It's better than a red down candle. And a little wick on top. Price percent oscillator still negative, heading down. Derivative oscillator negative, losing some downward momentum. First day of the latest 2-day candle, red open box. It's a slowdown in the up movement is what that shows us. Derivative oscillator negative, losing downward momentum. Price percent oscillator heading up, but hasn't crossed over, going up. So we'll keep an eye on things. And what about the half day? Well, we can see where the derivative oscillator is green, continuing to lose energy. Price percent oscillator about flat. We can see where gold peaked and then sideways for 2 days, 3 days, and sort of at 2.5 days, and at the end of the day, sort of moving over, heading down. So we'll keep our eye on gold. Again, just waiting to see what it's going to do. We had that 2-day recross. It was followed by, of course, 2 days of nice down movement. But since then, things have been trying to peg up. Hasn't crossed over going up yet, so we'll keep an eye. Maybe it's going to roll back over, heading down. Don't know if gold has it in it yet to really hammer up, but I can't wait till it does. Lastly, we'll look at Bitcoin. We had that weekly vertical crossover at the end of last week, and then this week, rather tepid. Hasn't hit a higher high. It is a green up candle, little wick on top, no wick on the bottom. That's okay. Price percent oscillator slowly pulling away from the red signal line. Derivative oscillator gaining momentum. 2-day, we can see where things have sort of topped out and slowed down markedly. This first day of this latest 2-day candle, a red open box. That is, again, is a slowdown. Now, we said up for the day 0.03%, but that Heikin Ashi shows us a real slowdown, derivative oscillator losing momentum. And what do we see on the half day? Again, we can sort of see the ebb and flow. We now have solid green candles for the day. What does that mean? Well, after solid red, it's a slowdown in the down movement. Actually up a little bit for the day. That's where we are, folks, as we end the day. Again, Patreon members, your weekly vertical crossovers on the S&P 500 will be coming to you shortly. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.